So thank you everyone for being here. I see there is a very big number of participants. I'm really happy that we've been able to create interest and awareness on the topic, and to have so many people interested. Obviously, this is thanks to our amazing lineup of speakers that I will now go to present quickly, and I will present you also the agenda of the webinar. So we will have two initial keynotes from Keith Lewin and Henry from Henry Newby from Superscript, and Keith from Kodat. Then we will have two startup pitches from Paul Prendergast of Kena, founder of Kena, and Juanmi Lopez of Cover. At the end of this, we will allow the participants to make questions, so there will be a quick Q&A session. At that point, if you want to make questions, just please raise your hand here on Teams, and they will allow you to speak. And after that, we will have the panel discussion with Paul Staples, Joel Lagan, Jason Wexler, and Andy Oldway. This is the agenda of the event today. The topic of this webinar, as you know, is about embedded insurance for the SMEs segment. Just wanted to provide a brief background. What do we mean with embedded insurance? As we were discussing with the speakers in the latest 30 minutes, it does not exist today an universally agreed definition of embedded insurance. As Open Insurance Observatory, we have identified and provided a definition of what we consider embedded insurance. So for embedded insurance, we mean making insurance available in the day-to-day lives and works of people and businesses, creating in this way the possibility to offer the ultimate utility of insurance, that is protection, in the moment when people and businesses need it, through the channels that they know well, they are familiar with. This is the description that we have for embedded insurance. SMEs, embedded insurance for SMEs, is one of the most interesting topics in this moment, and I believe also in the future. We know that SMEs all over the world, they are heavily underinsured. It's estimated that 50% of SMEs around the world are uninsured or underinsured. This is obviously a big problem, because we know that the more a society, the more an economy is insured, the more it's innovative, the more it's able to take risks and to be resilient towards accidents and the bad things that can happen. So insurance is a fundamental part of our society and our economies today, and increasing the penetration of insurance among the SME segment is fundamental for the evolution of our society and our economy. And embedded insurance today is considered, from the insurance and insurance companies and the insurtech enablers that we have had the privilege to have in the observatory and to involve in our researches, is considered the biggest opportunity for insurance to continue growing in the future, and particularly in the SME segment. Why? For several main reasons. For me, some of the most relevant are that, first of all, SMEs are increasingly behaving like individuals, like a retail segment. They are increasingly looking for digital insurance. They are increasingly looking to find insurance in environments that they know well, that they trust, like softwares, like marketplaces. So the behavior is changing. The technology today is enabling to offer and embed insurance in those environments. It's possible to create huge synergies with sharing data that those channels, those software, those platforms have about the SMEs, in the benefit, first of all, of the SMEs and in the benefit of the whole ecosystem. This is the reason why we are here today to talk about embedded insurance for the SMEs segment. Now I will start the webinar. So we'll let Kit Lewin to introduce himself and to start his presentation. Kit, to you. I think you are on mute, Kit. Just a second.
I've got it. Sorry, good start in that respect. So sorry, just say thanks very much for the introduction, Yuri, and great to see so many people interested in this space. So in terms of what I was going to cover today, Yuri asked me to speak and add some market context around the opportunities and for data and technology to transform small business insurance. Specifically with that aim, first of all, to introduce myself, my name is Kit Lewin. I'm an enterprise account executive at Kodak, where I specifically lead all of our work within the insurance space. I was going to quickly cover off, what are the challenges that we see in SME insurance today? Yuri's already alluded to some of those, but add some market context. Specifically, I pulled some stats from a recent report that we did on the state of small business software here at Kodak that adds some great context around the opportunities and types of software that small businesses are using that represent a great opportunity from an embedded insurance perspective. Also cover off, what are the challenges been around embedded insurance, specifically in the context of SMEs, and why is it potentially behind the curve compared to some other personal lines spaces which have potentially evolved a little bit more quickly. Finally, just covering off, what is the real opportunity for embedded insurance, looking at a specific market opportunity that I've pulled out in the context of the market. And again, I think there's a Q&A with all the speakers in due course, and happy to answer any questions as part of that. So why isn't SME insurance working well today? As Yuri alluded to himself, 50% of businesses, this is a UK specific stat, but I think generally applies globally, are underinsured today, which is probably the biggest demonstration of the lack of, the impact of insurance not serving small businesses as well as it potentially could have. The other side to the stat to consider as well, though, is the fact that the other 50% of SMEs are probably overinsured, and the reality being that no one or very few SMEs have the right or relevant cover for their business that evolves with them in real time. Another interesting stat, so only 20% of UK SMEs updated their cover directly within the pandemic, despite the fact we had major lockdowns, and everyone's cover needs were likely changing very quickly as the economy evolved in that context. The 20% is interesting because it just demonstrates the apathy and lack of understanding, really, that most SMEs have in relation to their insurance cover. And again, demonstrates the problems which small business insurance has typically had in having customers that fully understand the product that they're buying. Also, 43% of UK SMEs purchase their latest policy via digital channels. And why is that important? Because it demonstrates the major move towards digital channels, which again, I'm sure everyone on this call is well aware of. But ultimately, with some data from McKinsey, convenience being the #1 reason why businesses were choosing to buy policies online, and that being hugely relevant in the context of the growth of embedded insurance and the growth of more digital SMEs. Finally, also 66% of SMEs are keen to pay for their insurance contracts on a monthly basis. And again, this is just a great demonstration of the fact that 12-month policy is increasingly less relevant for small businesses who want much more flexible and customer-centric forms of insurance. This is a specific quote that I've pulled directly from a McKinsey report that I can highly recommend anyone in this space taking a look at. Potentially I can share it with you and you can send it around following the webinar. But carriers have a once-in-a-generation opportunity to make inroads into the SME segment with a refreshed set of propositions and a customer-centric approach. And inevitably, open embedded insurance is going to play a major role in this. In effect, the traditional approach for SME insurance is no longer relevant in a world that is continually turbulent, and for SMEs, they're increasingly more digital. As I mentioned, I want to pull some specific stats from a recent report that demonstrates some of the major opportunities for embedded insurance. The average SME today, and this is based on US, a recent study that Kodak conducted with YouGov relating to kind of 500 SMEs in the US, but the average SME in the US is using more than 40 pieces of software to run their business. That represents a huge opportunity if you can select the right forms of software to embed insurance products to gain access to those massive markets. The interesting things that were coming out of that study as well, the predominant forms of SME software being used by small businesses are predominantly financial software. So accounting and ERP being the number one. And I know Henry's going to touch on some interesting examples directly from that space in due course, but also other areas such as payments in and payments out, as well as vertical SaaS, again, which I know Paul will be touching on in due course, particularly interesting. So these platforms obviously offer huge opportunity from a distribution perspective, but also separately from a data perspective, offer huge opportunity to create new digital embedded insurance products that better serve digital SMEs of today. As one small example of the size of the opportunity, obviously 20 million small businesses are using accounting software in the USA alone. And again, 3 million in the UK for some local context as well. So why specifically has embedded insurance been seen slow levels of adoption potentially within the SME insurance market? Again, I think Henry's going to cover off some really relevant examples from the wider market and some interesting points of early innovation. But I think it's inevitable when you look at the market that adoption or creation of new propositions in an embedded context in SME has been slow, and there are lots of reasons that drive that trend. First of all, I think SME insurance products are typically far more complex than some of the personal lines, things like travel insurance, for example, which I know is a heavily embedded form of insurance. The complex nature of SMEs, the evolving nature of the risks they face, and the evolving nature of the complex needs they have means that it's very difficult, or has historically been difficult, due to data availability, but to build specifically embedded products that serve that market well. Increasingly, that is changing as these platforms become ever more predominant, and the availability of open APIs give the opportunity to build connected and fully embedded products in that respect. One other major factor that I've heard from a lot of the conversations that I've had with insurers and brokers alike has been lack of interest or potentially apathy from major ecosystems and platforms, specifically in looking to prioritize insurance distribution. So again, I think Kodak, we have a lot of major SME ecosystems as investors, the likes of Shopify, Amex, PayPal as a couple of examples. And specifically, I think historically we have seen potentially a lack of interest directly within the space of kind of distributing insurance products. But the major thing that we're hearing is that is changing, largely driven by an increasing awareness of the opportunity to better protect small businesses. Again, you can start to see this in the context of Amazon's focus to ensure that all of their merchants have product liability insurance in the US. I think that's being rolled out globally as an example. And people increasingly also aware in the current economic circumstances of the opportunity to specifically develop new lines of revenue generation within their existing customer set. So that's both from a bank assurance perspective, as well as directly some of these major SME ecosystems. Finally, as well, I think the regulatory environment hasn't always been abundantly clear, and again, has in some cases been a barrier. So again, fully embedded solutions in the SME context. Again, the regulation will change on individual markets, but it's been historically very difficult to fully embed SME insurance propositions within ecosystems without the need for the SME ecosystem partner to be regulated potentially as a broker, which typically has not been high up the agenda of platforms like Xero, Intuit, and other major SME ecosystems. But again, increasingly that's changing. And I think, again, Henry will touch on some really interesting examples in this context. So ultimately, what is the opportunity for embedded insurance for SMEs? I think, from my perspective, it feels like a massive opportunity to leverage data and technology to properly transform small business insurance for the better. three particular ways that are particularly interesting in this context are: one, obviously making insurance more accessible, more relevant, and more customer centric for SMEs, ultimately making a simpler buying process and offering better protection to those small businesses. Bring to market new propositions that deliver an evolution of potentially historical insurance products, but in a new digital way that is more relevant, more flexible for SMEs today. At the same time, the digital context of this offering huge opportunity to significantly reduce the expense of serving small businesses, which has been a major challenge for brokers and SMEs historically. Again, from a broking perspective, I'm confident that there's a real opportunity to kind of transform the way in which small businesses are served to help them better understand insurance needs going forward. We talked a lot about insurance distribution, specifically have pulled out an opportunity here. Again, looking at the number of merchants associated with the 5 biggest commerce platforms globally, across those 5 platforms, those merchants representing over a £10 billion GWP opportunity to the market, and that's based on a $250 annual kind of premium. Finally, obviously leveraging the data and technology that sits within these platforms to build new and more relevant products. So again, the likes of accounting platforms obviously have a wealth of information, largely well aligned to the existing rating criteria, as well as a wealth of other information. I know Paul is going to touch on some interesting examples as well from a vertical SaaS perspective. But again, the opportunity to basically build new differentiated underwriting in a world where there's a lack of differentiation in this space. Hopefully that sets up the context for Henry's session in due course. So I know he's going to touch on some interesting examples actually from the market. So over to you, Yuri and Henry.
Very interesting. Thanks a lot, Kit. Thank you very much. And now to you, Henry.
Have I managed to successfully share my presentation?
Yeah, we got it.
Fantastic, and you can hear me. That's a really solid start. Listen, Kit, thanks very much for that that intro. You make a fantastic warm-up act. Before or as people were joining the call earlier, we're having a really interesting debate around actually how we define embedded insurance, and on the basis that I think my role here in part is to provoke thought and invite comment. One of the things I wanted to kind of share right from the outset is I think, both from a personal point of view, but also from the point of view of the business that I represent, I think it's fair to say that our view around embedded insurance and how we define embedded insurance has certainly evolved over a period of time, and probably to a certain degree continues to evolve. And so the next few minutes is really just a bit of an insight in terms of how I in particular, and I guess therefore our business more broadly, is starting to think about embedded insurance and what that means, and examples that we're seeing across the market. Just by way of introduction, I'm Henry Newby. I'm Partnerships Director at Superscript. We're a small business insurance provider operating out of the UK. The other thing I was just going to share is in the lead up to this event, I took the opportunity to write out to a whole bunch of friends and colleagues across the industry, really to call upon them to provide some input ahead of today. So I was asking people to highlight to me examples of embedded insurance in the SME space that they had come across that had particularly kind of caught their interest. And I won't reveal any names here, but one of the things that was really kind of interesting for me going through that exercise is that people actually struggled to come up with specific examples. And therefore, I think one of the things that we were just talking about ahead of the call today is I think there's a real responsibility upon us as a community to be clear in terms of what we mean and understand by embedded insurance, and to support that with some clear examples that are already existing in the market that we can point to and say, this is an example of a embedded insurance proposition out in the wild, as it were, in the SME market. The first slide I'm just going to share with you here, this will probably be familiar to lots of you, not least because this is something that Yuri has shared previously, but it just provides some context in terms of some of the verticals that I'm going to be touching upon in just a second, where you know, I've identified some examples of what I believe to be embedded insurance. So Kit has already talked in terms of some of those you know, software platforms. Accounting is one that immediately comes to mind, and there's a couple of examples that I'll touch upon in just a second. I think that vertical space is really interesting, and certainly from a Superscript perspective, we've got a number of examples in place at the moment where we're working in certain verticals with partners to provide an embedded insurance proposition for their users. There are obviously the digital platforms, which again, Kit touched upon, and then I'm actually going to finish with a couple of thoughts in relation to marketplaces, and specifically actually Starling Bank, because that's the relationship that we're also actively involved in. And I think it's fair to say that that particular example challenges some of my thinking around, you know, how I define an embedded insurance proposition or not. So just to kick us off with a couple of examples, I mean, this has been in operation for some time now. This is an example in the accounting platform space. It's been in place for a number of years. It's a partnership between Hiscox, the insurer, and Free Agent, the accounting platform here in the UK. And essentially, as a Free Agent user, you can access a small business insurance offer provided via Hiscox through the Free Agent platform. The user provides some consent. That data is then shared with Hiscox, and what that gives Hiscox the ability to do is to return an indicative price to the user. The user then has the ability to kind of configure that cover if they you know so wish to do, but a price is at least being returned in the Free Agent environment. And then if a customer goes on to purchase the policy, similarly, things like their policy documents are actually being held again within that Free Agent environment. So you know, certainly from a casual distance, as it were, if I look at this particular partnership, I think it very much kind of passes the sniff test in terms of, is this or is this not an example of embedded insurance in the SME space? Interestingly, just this morning, there was a bit of press flying around Next Insurance and Intuit QuickBooks in the US. Now, Intuit QuickBooks have had a small business insurance offer in place for some time. They've actually been working with a number of different providers in the US, including Next Insurance. But interestingly, this latest play, which I haven't had the opportunity to dive into in a huge amount of detail, is very much positioning itself as a opportunity for a QuickBooks user to purchase their insurance without leaving the QuickBooks environment. So again, you know, just based upon that very kind of high level assessment, this again looks and feels like an example of embedded insurance in the SME space. From our own point of view, just moving on to vertical SaaS platforms, we've got a number of relationships like this in place at the moment. So this is an example of a partnership that we have with a business called Urban in the UK. Urban is a platform operating in the health and beauty space. So in very simple terms, you've got the provider of a service on one side of the platform, for example, a massage therapist, and a customer who wants to avail themselves of that service on the other side of the platform. Part of Urban's value proposition to the end customer is to say, look, if you book someone through our platform, you can have a level of confidence around their ability to perform the service that they're setting out to perform, that we've run, you know, various kind of due diligence checks on them in terms of things like DBS checks and whether they've got the requisite qualifications in place. But also, if someone comes to your home to perform a treatment, that they also have the requisite insurance in place. Now, in this particular example, we are part of the onboarding flow. So if a new therapist is coming to Urban's platform, there's a whole bunch of things that they need to do before Urban is going to set them live on the platform, make them available for bookings. And one of those steps in the journey is that they are required to evidence that they've got the requisite insurance in place. If they already have insurance cover, they simply upload copies of their existing policy documentation. If they don't have insurance in place, that's when the superscript offer is being put in front of the customers. So they have the ability to purchase their insurance, upload their policy documentation, and then continue with that onboarding journey. And interestingly, the onboarding journey itself is actually being fulfilled through a third-party platform. So in the case of Urban specifically, they use a third-party platform called Fountain to actually manage that onboarding process for them. Just moving across to digital platforms, there's lots of examples like this, but again, I think this sort of comes back to some of the things that we were just talking about as people were joining the call. But I think these next couple of examples are really nice examples of where an insurance product has been embedded in a third-party platform as part of an existing user flow. So this particular example that I'm highlighting here is for the ability for people to add shipping insurance when they're going through the user flow through Shopify. In a similar kind of way, My Carrier, this is actually a business based in the US. It's effectively a platform, a shipping management platform. And again, as part of their flow, they have integrated an element of cargo insurance as part of the journey. So as someone is going through the process of organizing the shipping, they have the ability to opt in to an integrated cargo insurance solution as well. The next couple of examples, this is actually in the property rental space, and there are actually two examples with the same provider. So Guesty is a platform for helping you manage short-term rentals. I haven't been able to uncover much of the detail that sits behind this as yet, but they've certainly been talking about having integrated a landlord insurance proposition within their platform. Alongside that, they also already have a damage protection product. So again, as someone is going through the Guestly user flow, they have the opportunity to opt into the damage protection as well. And then finally, just in the context of marketplaces, this is again an example of a partnership that we're involved in alongside a number of other insurance providers in the UK. So the likes of Nimbler and EquipsMe and SoSure and Dingy are all also present in the Starling Bank marketplace. But the way that this effectively operates is a business banking customer through the Starling app gains access to Starling's marketplace. Within that marketplace, there are a whole bunch of providers across a wide variety of different, products and services, including a number of insurance providers. If a customer wants to go through a quote journey with any of those providers, they're able to add that particular provider to their marketplace. And then at the point of entering the provider's quote journey, any information that Starling already hold about that customer that the provider requires for the purposes of their quote journey, that information is pulled through an API. The fields in the quote journey are pre-populated, And then if a customer goes on to purchase a policy, there is a level of information that is returned through the same API integration and presented back within the Starling app. Now, part of the debate that we were having earlier, and this is probably a really good example of what I was saying in terms of how our thinking has evolved over a period of time, is I have some question marks in terms of whether this is truly an example of an embedded insurance proposition. I mean, what it certainly is a really neat technical integration. And there is, you know, some element of information being passed between the parties and then surfaced in, you know, the other's environment. But where maybe this Starling example differs from some of the other examples that I've mentioned is this isn't necessarily sitting as part of a core banking flow. Yes, they access it through the app, you know, but in many respects, I kind of look upon this and I can't help but think that in many respects, this is no more than a simple affiliate, you know, marketing opportunity. Yes, supported by some really nice technical capabilities. So there's a nice integrated solution from a tech point of view, but whether this passes the pure definition of embedded insurance, I would question. And that's it for me, Yuri. Hopefully that's provoked a few thoughts and might invite a few comments.
Yes, absolutely, Henry. I found this overview of use cases really inspiring. It's so interesting to see how many different platforms, how many different software are used today to offer embedded insurance with so many different touch points. And we have just started scratching the surface of the opportunities. So very interesting. Thanks a lot. Now it's the turn of Paul Prendergast, founder of Kena. Kena is a startup operating in this space. So Paul, up to you.
Thanks, Yuri. Appreciate it. And thanks to the guys who went before. Very, very interesting stuff. So Kena, what we do is we're an embedded insurance company focused completely on providing the infrastructure to vertical SaaS companies. And to what end? It's really focused on fixing small business insurance. And is it a problem? We think it's a massive problem. If you take the US market, 40% have none, and 75% are massively underinsured. And we've seen the impact on that when it came to the problems around COVID and business interruption. It was a massive, massive issue. A lot of small businesses in a lot of trouble. And I suppose the aha moment for us, it's all about data. This is myself and Peter, my co-founders, third InsurTech. And we looked at vertical SaaS. That's where all the data that we need to price the risk properly, to give personalized insurance to the small business. And this is where small business software is moving very, very quickly. And this is a whole bunch of unicorns that have emerged in the last couple of years in the States and elsewhere. If you look at the bottom-up opportunity, whether it's Muse in the hotel space, Service Titan in the home service delivery space, Toast, Glowfox, Mindbody in the gym space, that's about $1 billion market opportunity. So really interesting market opportunity from the ground up. So vertical SaaS, I suppose the real question is, does it matter to these folks? And interesting what Kit was saying, that very hard to get them engaged. And that's why we're very interested in this space. Is they're making a lot of money out of fintech at the moment, payments, moving into asset financing. A lot of them are very, very interested in doing insurance. Some of them have actually built a whole insurance organization themselves because they're not very happy with what's in the market right now. Key thing for a vertical SaaS, they want to keep their customers on their platform. They don't want to get 10% commission and it moves over to an insurance partner and they lose visibility on what's going on. So this is very important, and they want to solve all the problems they can for their customers. Insurance isn't the biggest problem, but it certainly is a big problem to solve. So what do? We provide all the technology for the vertical SaaS platform, so they can provide personalized insurance to their customers. And talking about what exactly is embedded insurance, our big belief is it's not about treating the platforms as just a dumb channel getting to a customer. We're looking at using the data on the platform to be able to provide the right insurance day one, and then over the lifetime of the policy, inventory goes up, workforce goes down, turnover goes up, that the insurance will change with that policy. Myself and Peter have worked together for 15 years. Last business was Blink. We're proven founders. We've been at this a long time, and very excited about this. This is probably the most exciting thing we've done, and we've just opened our pre-seed round, 500 grand, if anybody has money burning a hole in their pocket. Great, my 3 minutes is up. Thanks, Yuri.
Thank you, Paul. Thanks very much. Best of luck with Kane. I'm sure it will be a success. And now we have Juanmi Lopez, CEO and founder of Cover.io. Juanmi, up to you.
Thank you. Can you hear me? Can you see the screen?
Yes. We can see the screen and we hear you perfectly.
Okay, thank you. Maybe you are already aware of the importance of Apple Care for Apple, but do you remember when Facebook and WhatsApp went down? Apple Care is Apple's third largest business within Apple services, ahead of better known services like Apple Music and iCloud. But when WhatsApp and Facebook went down, the whole world was shocked. For businesses to date in 2022, these types of outages have generated $10 billion of losses. Hi, I'm Juanmi Lopez, CEO at Cover.io. I am actuary, economist, master in finance, banking, and insurance, PhD in innovation, master executive in AI. I spent more than 10 years in the insurance industry, and then I moved to Paytech, where I discovered two problems regarding e-commerce. They are losing the opportunity to extra monetize their customers thanks to insurance, and they are losing also the revenue due to temporary internet outages. Our solution at Cover.io is insurance for e-commerce. Our mission is to help e-commerce businesses to create a new revenue stream thanks to embedded insurance, while allow them to protect their revenue against internet outages. E-commerce is a huge opportunity, not only in Europe, but also in Latin America. We are going to start with pets. In Spain, we spent last year more money in pets, products and services than in beer, wine, and food and goods for babies. So in a practical example, our approach is this one. This is a well-known brand selling pet stuff through their e-commerce platform. They made last year 100 million euros. We are going to generate revenue with a percentage of their GMV, and this is our B2B approach. But they have the trust of their customers, so why not selling pet insurance? They can generate 30 euros on average per customer, and for us, could be the percentage of the GWP, and this is our B2B2C approach. Our business model is indexed to revenue, so we are going to make more and more money from all their customers to be acquired in 2023. By 2026, are going to generate a much wider revenue. And we are going to start with Shopify. Shopify I discovered this when I was working in that Paytech. MediaMarket was one of our customers. They made 1 billion euros in revenue last year in Spain, and they use Shopify to sell their products online. Like MediaMarket, 15,000 brands in Spain use Shopify, and 370,000 in Europe. Our roadmap is this one. We started at the beginning of this year. Then we got our first beta testers and business angels tickets. Next year, we are going to start our go-to-market strategy and our funding round. And then hopefully we will have our product market fit in B2B and B2B2C. Then in 2024, we are going to chase the vision. So thank you very much. Feel free to reach me out through Calendly to discuss further. Thank you.
Thank you very much, Juanmi. Very interesting, and best of luck also to you for Cover.io. Thank you very much. we do not have, unfortunately, now time for the Q&A. So feel free to write if you have questions in the comments, and we will take care of forwarding them to the speakers. We now pass to our panel discussion. I go to introduce the speakers of the panel discussions, who are Joel Lagan, Director of Business Development at Planck, Andrew Oldway, Co-Head Strategic Partnerships EMEA at Swiss Re, Paul Staples, Global Head of Banking as a Service and Embedded Finance Proposition at HSBC, and Jason Wexler, Head of Insurance Underwriting at Procore Technologies. So thank you very much to our panelists today. I will start with making a question to you, Andrew. So with embedded insurance, as we have seen, a customer, an SME, can you as an insurer, you can get to an SME through a new channel, like marketplaces, vertical SaaS, as we have seen, that already play a central role in the lives of SMEs. So what is particularly attractive in this perspective for an insurer? And what can embedded insurance offer that traditional channels don't?
Yeah, good question, Yuri, and good afternoon to everybody. So I'll answer this around 3 topics: efficiencies, growth, and ultimately profitability. I think with embedded insurance, it attempts to turn the acquisition of a policy from a push sell or a grudge buy to maybe not quite a delight buy, but a buying experience where the customer sees an immediate need within their current customer experience or journey at that immediate moment, therefore leading to a policy purchase that is relevant and makes immediate sense, and effectively resonates with a more positive customer interaction, and then ultimately a higher propensity to buy. So with a higher propensity to buy, you get the higher conversion rates, of course, and through the efficient digital acquisition channels, obviously a reduced operational acquisition cost versus other channels also. And then in this, in theory, leads to greater efficiencies across the life cycle of the policy, which I think was mentioned before, acquiring customers through a positive interaction, leading to, in theory, a better engaged customer, leading to also then healthier retention rates. Again, as the policy resonates more highly with meeting specific needs and the need to renew. But of course, we need to remember, if the acquisition is simple and efficient, then we need to make sure the renewals are too. So with higher conversions, lower cost, higher retentions, scale can be built quickly, and more meaningful, profitable commercialized portfolios built. And of course, you know, as we always know, SME portfolios have always been the linchpin of balancing those more volatile commercial lines portfolios with more stable, predictable results. Therefore, having a larger, more stable foundation of SME business can then unlock additional growth strategies in the larger and more complex business lines.
Thank you, Andrew. Jason, what are the needs of an SME in the construction space, and how does insurance fits in helping SMEs solve their needs? Embedded insurance, obviously.
Yeah, thank you, and good afternoon, everybody. So the SME opportunity for contractors is tremendous. Firstly, let's talk about how large this industry is. In the United States, there's over 1 million subcontractors in the SME space. In Europe, I believe there's almost 3 million subcontractors or smaller contractors that would meet the SME definition. So it is quite dramatic. And when we think about how we can better service them, contractors purchase a lot of insurance, but there are often opportunities where they are either underinsured or their insurance is grossly deficient. So what we are trying to do is a couple things: make sure that experience is seamless and simple, because a lot of contractors describe getting insurance not like a headache, but going to the dentist. It's something they have to do, they don't want to do, and it's quite painful. So we want to make this frictionless experience that's simple, help through an automated underwriting process, right? But also make sure that they're meeting the requirements of and purchasing enough insurance, and they're not underinsured. Just getting an insurance somewhere online, they might not meet the requirements of their next contract or job site. So for us, it's really important that they have adequate insurance so that they can grow their business.
Thank you, Jason. Joel, embedded insurance has a growth channel for sure, as we have seen, but it's also a new way for insurers of interacting and accessing new data. So we know that insurers find it challenging to perform proper SME risk assessment, often due to the lack of data and the inability to get insights into their financial status and perspectives. So what are, in your experience, the key data useful for an insurer that embedded insurance can provide access to?
Yeah, so I definitely agree with the premise. And again, sorry about the background noise. We're on the floor at ITC, but definitely agree with the premise that it's a growth channel, you know, and the need to provide the data at the point of sale is critical. The types of data, I mean, it's like the data that exists in embedded, that exists in sort of persistent data sets out there is not sufficient, I think. So what fills the gap now in traditional insurance is a seasoned underwriter who's going to make inferences using their experience, right? Increasingly, AI can do that. And so, you know, the types of data that I see, there's the structured and unstructured stuff that's sort of available through third-party data vendors, but then the stuff that can be inferred. And I don't want to get too far ahead of myself, but there's the key data is really determined by the need of the risk-taking end of the insurance carrier and the availability of the data in a digitizing world. So that's sort of, I don't have like a limited set. I see an expansive world in data. Of course, that's part of why Plank is in the conversation, right? Because we're constantly moving out the boundaries of what's important in the underwriting process. What we think is important today in underwriting a policy is going to be different tomorrow, because I think what determines risk for an insured is going to be different. You're going to be looking at different variables. I hope that makes sense, but it's an exciting place to be in this data-driven insurance space.
Makes a lot of sense, actually. Thanks, Joel. Paul, you have a multi-year solid experience in open banking, embedded banking. So do you find embedded banking services for SMEs successful so far? What would you say, below or over the expectations?
We need to answer this in two separate streams. So you've got SME embedded banking at a B2C context. So those offering it out on a retail basis, and then you've got those offering it on a B2B basis. I would say within B2C, we're seeing positive green shoots. So I think there were some examples earlier of companies like Mindful and Toast. Where their success has come from is largely B2C. They're offering buy now, pay later type solutions. They're offering payment rails to consumers, their checkout solutions, those sorts of things. When you move into the B2B world, the green shoots are beginning to emerge, but they're not as prevalent. B2B is complicated. And just to give an example of that complication, and the comparison, in B2C, if I need to do a KYC check, I do it on one individual, a passport check, a driving license check. Generally, that's sufficient. In a B2B context, I've got to look at the company structure, the debt structure, the shareholder structure. I've got to do KYC on every one of the directors, any significant shareholders, all of those sorts of things, just before I can even do a basic onboarding process. And that alone is a complicated element. So the traction within B2B is growing. There are increasingly new solutions out there, but I'd also put a contextual element around regulation. The regulation in B2C embedded banking is largely mimicking, if not is the same as regular retail banking. In the context of B2B, the regulation is largely unwritten, unknown. And so far as what the OCC has recently been suggesting, they themselves don't know what the regulation will be in the future. And as a result of that uncertainty, there is nervousness around doing embedded banking. So we're having to kind of work hand in glove, not just us HSBC, but the whole banking as a service industry is having to work with the regulators around the world to kind of promote B2B embedded banking. So that's where the green shoots will start to emerge when I think regulation stabilizes and there's a little bit more future certainty.
Thanks a lot, Paul. So it looks like reducing the friction is one of the key points for making embedded B2B finance and embedded B2B insurance to grow. Thanks very much for this interesting perspective. Andrew, returning to you, what benefits you expect embedded insurance can bring to SMEs customers?
Yeah, look, we all know that SME owners are very pressed for time. They may not have a full understanding of insurance, what insurance is relevant to their business, and a constant question of that value creation to their business. We did some research last year, and an SME owner was famed for telling us that the SME premium spend is the quietest operating expense on his P&L. And he would love to research and find better offers, but simply doesn't have the bandwidth to do so, which is a little bit sad, really. You know, as mentioned in my earlier response, embedded insurance should be providing SME customers with a proposition that they need. It makes sense for them to buy it at that moment, and with a proposition that is also, in essence, more simple to understand, easier to buy and use. Big pain points that we hear SME customers talking about. So every money spent out of the SME pockets needs to give some element of return or contribution to their business, and naturally buying an SME insurance solution that is more relevant, more efficient to buy, easier to understand, and meet specific business pain points or requirements naturally better satisfies this.
Thanks, Andrew. Jason, personally, what benefits are you obtaining from embedded insurance?
Yeah, no, it's a fantastic question. And there's multiple benefits based on the perspective and the stakeholder. For us, it's about the data. Right. So first, the consumer is benefiting from a seamless purchase process, and we get to make sure that they are getting the insurance that they need and require to grow their business. From our standpoint, there's a lot of data that we're able to ingest, absorb, and manipulate around that customer, not only the experience, but really to help better underwrite the customer and ensure that it goes a level beyond a standard insurance application because we are embedding in the process, in their process, and there's a data sharing agreement that occurs, and that just provides insurers, I think, access to data that they never really had, that often doesn't make it onto insurance apps. So the data can get a lot more robust being in their experience and seeing how they use that vendor.
Thank you, Jason. Joel, SMEs have a very big protection gap, as well as we know, and there are entire new segments like gig economy, creation economy that are almost unserved from insurers because insurers do not know those kind of risks, and we know that when they do know that, their appetite is slow. So, do you think that the data created in an embedded insurance ecosystem can best position insurers to have more appetite for those kind of risks and insure them properly?
Yeah, again, I agree with the premise that the segment is underserved. But so the data that's created in those underserved areas will definitely, and this is what Jason is kind of building the whole premise on. You know, that's why he's there. Is that there's new data kind of spinning off in the business that underwriters haven't had access to before. You know, so I think part of this too is rethinking what is value that's created for. This goes back to what Andrew said. Like, I don't think we know what the SME might not know what they want in insurance other than that they have to have it, which is a terrible value proposition. Like, buy it from us because you have to buy it from somewhere. So I think that it's incumbent on the primary carriers and the risk providers to say, listen, we can rethink what it is that we offer to you, Mr. SME. You know, like, what is the claims delivery process? Making the company whole, right? That's our number one promise in insurance, making the company whole. How about loss control, proactive loss control, coming alongside them in a fluid way, more than just, hey, here's a policy because you have to have it. And then peace of mind too, because that's the other big, you know, value creation that carriers have. So I think the data is part of it, but I think the serving the underserved has to give a lot more thought to it than just, hey, here's a policy because you need to have one. I hope that makes sense, because it's an exciting place, because it's unbundling insurance a little bit from historical ties that's been limited by the data that's been available.
That's great. Thank you, Joel. Paul, did you find SMEs coming to you as a banker from a branch different to SMEs coming from an accounting software, the marketplace? Maybe different needs, different expectations. And if yes, how did you and how should banks looking to pursue insurers and banks looking to pursue embedded finance and embedded insurance should cope with this? So with these different profiles.
So the answer is yes, there is a difference. Those coming via a branch tend not to be digitally native, and they expect their customer experience to be delivered by us, HSBC. They're walking into our bricks and mortar in order to do so. When you're going via an embedded proposition, the relationship management construct or the relationship owner materially changes. It's no longer HSBC owning the relationship with the SME. It is now the accounting platform, or it's the online merchant, or the retail brand, if you will, or the merchant brand that owns the relationship. They want to understand and own that user experience from end to end, including the customer service. So therefore, we're now extricated from that SME experience, and we're simply just the rails. So I think someone used earlier the dumb pipes. I'm quite an advocate of becoming the dumb pipes, such that we do something else with them elsewhere at a later point in time. And that's kind of what's happening with the SMEs, is that they're getting their banking experience through a non-banking brand. The value is extricated from another angle. Do they demand different things? Those who are getting it through their accounting platforms or merchants tend to be quite time poor. They tend to have simpler needs, and they tend to have higher volumes. So it's a simpler business, higher volumes, lower value ticket size for us as a bank. That's absolutely fine, just to push that through and create the margin economics that we can achieve. Those that want a direct relationship with the bank tend to have more complicated needs. They will tend to want the feel of a bank as opposed to a non-bank brand that's supporting them. So we are I would say several years away, if not decades away, from everyone doing their banking through a non-bank brand. People feel security in the bank brand and what the logos stand for, and equally what the balance sheet stands for. So the other element behind all of this is we have partners that want to use HSBC's brand strength and balance sheet strength as part of their go-to-market strategy when they're embedding our services. On the other hand, we have partners that do not ever want to disclose that it's HSBC behind the scenes, save for where the regulator requires us to do so. So it's a credit solution or something along those lines, or where deposits are insured. And it all comes down to the experience and the owner of the experience. So that what I would say is the material difference right now. And I think we are, as I say, several decades away from everyone doing banking through a non-bank brand and doing it through Apple or Nike or Tesco or wherever it may be. And the bricks and mortar, and I think branches would still be here to support. What we might start to see is any activities that, again, back to the regulatory point, that regulators require us to do in person. And that's, I'm not saying for the UK here, but there are jurisdictions such as India where you need to present physical form KYC and KYB actually into a branch. We will probably still see some branch related activity unless the regulation changes.
Thank you, Paul. I have to say that the insights shared by all the speakers today have been very deep and interesting. On my side, I think that we have had a very interesting conversation, and I hope that all the attendees have joined it. I think we do not have time for the Q&A because our hour has finished, and I do not want to keep engaged our speakers for over the time agreed, because we all have they all have a job to do. I invite you all, or everyone interested in making questions, with more. You can feel free to reach out to us, to me on LinkedIn via email, and we'll take care of forwarding your questions, your comments to the speakers. I think it's the best way of coping with this. Thank you very much, everyone. I think it was a very good webinar. We have the next webinar in the 14th of October. That the topic of that will be embedded insurance for health insurance and life insurance. You will find news and promotion on LinkedIn on the Observatory page. Thanks a lot to all our speakers. Really appreciated their contribution. They shared with us tremendous insights, and thank you everyone to the attendees, and really looking forward to the next one. Thanks a lot.